Hello traders, it's 8:03 a.m. Chicago time, 9:03 Eastern on Tuesday the 18th of September 2018. Thanks for joining me again and again and again and again. Appreciate it. Been doing this for 4 or 5 years. I think a couple thousand videos, so one every morning except for the occasional miss, travel, whatever. And I see that many of you are saying hello every day. I appreciate it. Appreciate you. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a risk is slightly on. The S&P 500 is trading around 2,900. Closed yesterday at around 28.96, just slightly higher. Seeing a pop up in the euro as well. 335 pips. The small caps are up as well, 4.4 points on the Russell. The laggard today is the bond market, down 10 pips on the futures. The Japanese yen is also down, and U.S. dollars down 16.5 cents. So it's a slight risk on. One of the things you want to keep in mind, especially if you're trading crude, is that we roll to November today. November is a front month in crude. The symbol CLX8 or CLX18. The official symbol is CLX8. Make sure you're trading not contract. You do not want to initiate in the October today. Most FCMs won't allow you to do that today if they know what they're doing. So just make sure you're following the right contract. If you are using IQ feed, which is my favorite data feed, you're going to need to do a full download to get some back adjusted data. The premium difference between the October and the November contract is negative 23 cents in backwardation, negative 0.23. That's how much the prices will be adjusted by. So that's where we are. Again, risk on slightly. Really, it's a mixed bag. We're trading on the lower end of yesterday's range on the S&P minis. We're trading right into the lower end of the end of the range in the NQ currently, and in the middle of the 10 years. So overall, it looks like it wants to go higher. It looks like it wants to find those buyers. But it's not doing a great job picking up just yet. Here's what I expected yesterday, which was completely off, as it sometimes is and will be. The actual play from my notes yesterday was scenario 4, which I didn't cover. Scenario 4 was looking for an OTD, open test drive, down and a pushback and balance at 28.94. Yesterday, the expectation was that we're likely to glide higher. We were opening up in a gap down between Friday and Monday morning, and the expectation was for it to explore a little bit lower and then start drifting up and moving towards that 29.20 and potentially 29.2250. Did not happen. So here's what actually happened. We open up in a very brief open auction. You see that open auction there? A nice little zipper box. By the way, if you don't know what any of these terms are, I suggest you head on over to this website. You can go to htTraders.com or convergenttrading.com or go to CT, the number 2.com. Go into useful info, go into trading glossary, and there's a pretty comprehensive glossary in there for those of you who don't know what I'm talking about or don't understand these terms. Okay, I keep forgetting to bring this up. There is a glossary sitting there, and you can make use of it. So anyway, open auction in range is what it looked like, and then sellers step in. Sellers also step in delta, which is, continues to be questionable because of rollover volumes, not that reliable this week. But really just a quick drop into the value low. And I was looking for signs for it to balance and start pushing up for scenario one. Did not happen. So sitting on hands, sitting on hands, sitting on hands, and sitting on hands, and sitting on hands. And that's basically what I did yesterday. Is my hands got numb from sitting on hands. I did not see, yesterday was a bit of an exercise in patience. I did not see clear trigger areas, clear setups, just did not see it. So this is what we had yesterday. We had a nice little test of the mid at the time. We had the point of control right there, so it wasn't ideal. And we had already pushed down into the 2,900 to 28.99 and a quarter. So that wasn't something I was willing to step into. And so it held and it continued lower, and it tested down through the MC point of control, and then it balanced out. I could foresee this pop up on the close about within 10 minutes of the cash close, but by then it's just too late for me to stake any risk to take the trade. It's just part of the rules that I have. And so we ended up accomplishing the big thing yesterday, which is to get down into the MC point of control. The MC point of control microcomposite basically means it's a composite of a bunch of different days. There's the microcomp right there. And you can see that the most traded price on that microcomp before I include yesterday's data is that black line, and it's outlined here up top. 28.94 is the point of control, and that's basically what we pulled back to. We closed the gap that was put in the 14th, and we stabilized in this area. It's very important what it does today, though. What it does today is to start pushing back up into the balance up top. So if we want to know where that balance is, we create a new microcomposite, and that balance is 2909.75. So that would be the bigger target on the top side. Let's extend this profile out to include yesterday. There it is. 28.94 remains in place. And so if we start to look to get buyers today and to start to move up, then this will be the area it's likely to rest at next. If it's following standard auction theory, basically, volume profiling. And that's the expectation from here. If it holds, we did end up with a weak low yesterday. Yesterday was almost a trend day, really. The point of control we did not have a point of control that shifted to the low, but it did behave like a trend day. There was a lot of news chatter. Kudlow was on Bloomberg or CNBC also. President Trump came out and said that he had an announcement regarding China and tariffs after the close. Really makes the market nervous. And so we end up with this push down when it actually looked like it was stabilizing after the test of 28.97.75. This was also news. You can see that this is a drop and a pop. So there's a lot going on here that really is news-based. Kind of an annoying thing, actually. I don't mind news because it brings volatility, but innuendos and this sort of stuff makes it so that the auction is just consistently interrupted, which interrupts my ability to form a narrative that I can trade. I have to kind of sit on the sidelines to see how the news is taken and responded to instead. So that's what we ended up with yesterday. Okay, the overnight high is 29.04. So the overnight high pulled back basically to the lows or the initial resistance after yesterday's close of 29.02 to 29.04. And we're currently trading 28.98 even. So we're currently trading this area right here. So you can see there's a lot of structure here. Could go either way, in my opinion. as it stands, it really can be seen. This can be seen as an impulse, beginning of an impulse down and a turn. In other words, we've gapped up, we're rotating, and then we're starting to turn over. The point of control is lower. We've finished we ended the one-time framing up on the daily, and we may be starting one-time framing down again on the daily, even though it looked like we were setting up to really run for the highs. So that's how things were shaping up yesterday. Here's what it looked like. Here's what it looked like on the order flow. Just a lot of big prints, a lot of big hits on the way down. There was a lot of participation on the way down. Again, the delta was negative yesterday. And then the market opens up, and it closes right up here. And then it opens up and it sells off right away. And then the whole night, it's just drifting up to the 2904 high that we have currently. And then just now, it rolled over on, of course, more chatter about China and tariffs at 8:02, just a minute before I started the broadcast. And it's the reason why we started at 8:03. I wanted to see how the market would respond. At 8:02 Central, 9:02 Eastern, China came out reportedly to levy tariffs on $60 billion worth of U.S. goods at 5 to 10% rates effective September 24th. That's in my news feed. And that's where we see this little sell-off right here. That's where we get this little sell-off right here. So this is really what I was talking about, in that, great, we get a little sell-off. That's nice. I like it. I like impulsive moves. They give me an opportunity to trade the pullback. The pullback's around 2,900 probably, gives me about 50% of the move. And then I'm looking to re-challenge yesterday's close. Notice there was a collision here in the order flow right at yesterday's close. Somebody came in as the market was dropping. This is a scalp setup. As the market was dropping, somebody came in and actually bid this and took all of them so that the market couldn't push through, and then we're bouncing back up, and now we're looking for a response and a continuation lower for a 3-point or 4-point opportunity potentially on that. So the news is really driving everything, is my point. I think I belabored it a little bit. As far as what we're looking for on the overnight, to continue the narrative, as I had said, the overnight session really started out with this sell-off. Again, more tariff stuff. And then from there, the market's like, meh. And then they started drifting up. Okay, back to the SOC, the scene of the crime. And then the Europeans came in and lifted a little bit more. And then now we just sold off. So we've tested we have a range, a pretty wide range on the overnight session, 21 points with an elongated P-shaped profile. The profile is shaped like a P like this, which gives us an idea that it may be short covering as the market pushes up and holds this area up here. This is an indication of potential short covering. The overnight inventory is really balanced overall. A lot has traded below. About half of it has traded below. This is a 15-minute chart. About half of it has traded below and half of it has traded above the close. And the delta is negative, but again, delta cannot be trusted at the moment. Volume is high, but again, volume cannot be trusted at the moment. It is higher than it was the night before, so there was a fair amount of activity there. So what are we looking for today? Just so that we can conclude here and you can all run off and do your business. Things shifted from when I looked at the market last night, was doing a little bit of homework. To me, this looks like it is not able to push any higher. My expectation is for an open auction. We're opening in range. We don't quite have value yesterday. We kind of do, we kind of don't. I'm expecting a drift up as the market opens, I'm expecting it to drift back up to the overnight high. I'm looking for it to stabilize, and I'm looking for a push into the upper end of yesterday's range. If not, news based. If not, to take out that yesterday's high and start shifting back up into this 29.1175 to close this area that we left behind and a week high. We have a week low yesterday. We have a week high on Friday. And so it's really I'm looking for that drift up. Just as equally likely, we're looking for the same kind of action, but a market that is balancing out, pushing down back into the point of control. We're right underneath that 2,900 century figure. And so looking for it to fall back into 28.94 and then to start making its way and closing the areas below. Now, how is that useful? Each side is the opposite of the other. The reason it's useful is because I know that if it's not able to continue higher and take out the overnight high, I know that I need to trade from the short side. Now, let me tell you this. This is based on, a good amount of prop experience, just backing traders live. It's not theory to me. A lot of people talk about trading and stuff, but it's one thing to trade and be intuitive about your trading. It's another to back people and actually monitor their performance and help them with their performance as employees. It's, do you need all these fancy charts and lines and everything else to trade? You don't. But the fact is, the hard part for most people is, even though they have a plan, they're not able to actually hold on for the targets that they have in front of them. And so it's really up to you to come up with your own plan. But when you engage, it's really important to have scenarios so that you can hang on, so that you're not shaken out as soon as it starts to bounce around the MC point of control at 94 and so on. And that's really the important part about being prepared. I do this every day for myself, and I decided to share it out in the open on these Trader Bites. But this is how I trade, and it's really important to kind of understand the narrative, the story behind this. All of this can get thrown out in half a second with a news item, and that's why my news feeds are really, really important to my trading. It's not like I'm trading the news, but knowing when things hit the wire gives me an idea of what's pushing things around and what to expect oftentimes before the market even moves. So these are the two key plans today. We're in a situation here where we could get an open test up, drive down, and then scenario 4, open test down, push through yesterday's low, poke below yesterday's low, drive up, back up to where it says 1 volatility sigma there at 29.0675, hold for a while, and then push yesterday's high. Anything goes here. So today, just like every week for rollover, there's a lot of jacking around with delta hedging, option hedging, and things like that. So it's a hard week overall. So sitting on my hands is not a bad plan, okay? But at least come in with a plan, come in with some goals, and that way you're accomplishing something. I've talked a long time. Good luck today, and I'll catch you later on. Take care.